What's up, sellers, and welcome to today's video. Today's video is going to be different than normal. Normally I talk about things like how to sell on Amazon, how to sell on eBay, what to sell on these platforms, how to make money online. This video is a little bit different in that we will be talking about the stock market and specifically day trading and swing trading stock options. All right, welcome back. Like I said, we're going to be talking about day trading and swing trading stock options. This is not something that I know a tremendous amount of information about. However, I've had a little bit of success over the past several weeks, and I want to explain why I'm doing this. On Instagram, I had several people jump into the DMs after I shared some of my screenshots of gains and earnings, and they were like, hey, what are you doing? How are you doing this? So I'm just making this short video to explain what I'm doing. Quick, before we jump in, I just want to clarify that none of what I say, nothing here is financial advice or is me telling you what to do, what to trade, or anything like that. This is purely my opinion and things that I'm looking for and trying to dig out of all of the mess of information on the internet. These are strictly my opinions with no advice whatsoever given on this video. I can't go into huge in-depth detail about all of the stock options and what everything means, because honestly I just don't know. I know the basic amount to get by, I think, and to not hemorrhage money. When I first started, I knew nothing about it. I was just buying options, whatever options I could afford to buy, and I was buying out of the money. I was buying extremely short expiration dates out of the money, and I just lost several $100s doing that.
I am never going to financially recover from that.
And that's kind of the beginner mistake from what I understand. I've learned a little bit about how to go about this stuff. Down in the description of this video, you'll see a link. It'll be the first link in the description to a channel called Project Options. And this is the channel that I'm learning from. And a lot of his videos go into great detail. They're really long videos. You need a pen and a pad of paper to take notes because his videos are just incredibly in-depth and teach so much useful knowledge. And so basically I'm going to share what little I know, and then you can go from there. This is just for the dozen or so people that asked me through my Instagram DMs for the strategy or what I'm doing. And so I'm going to share with you the little bit that I know about this stuff. If you are an experienced trader in options, be sure to jump into the comment section, because I'm sure there's going to be plenty of questions as well as comments that need to get answered. Just be sure to put good quality info out there. I'm going to pop up a little screen here where I'm going to explain what I'm doing and how it is working for me, I guess, kind of. Basically, over the past several weeks, I have been trading stock option contracts from within Robinhood. I do all of my due diligence and looking at charts on TD Ameritrade, Thinkorswim, but I do all of my actual buys and sells on Robinhood, and there's the only reason for that is that the Thinkorswim platform for options is just confusing to me. It's just really cluttered and confusing. So I just stick with Robinhood, and so far it's been decent. Overall, for the past few weeks, I have made a couple trades that were losing trades. However, I've made more winning trades than I have losing trades. I've had 4 weeks in a row where I have closed my positions at a 20% or higher gain. 20% per week is my goal for trading options, and I've been able to hit those goals every single week for 4 weeks straight. Prior to that, there were some wins, there were some losses, green weeks, red weeks, but with what I'm doing, I'm seeing more consistent green weeks, though 20% is not terribly high when it comes to trading stock options. Normally with stock options, you're going to win or lose massive amounts. Like I'm seeing people 50 or 80% gains or losses. I'm just trying to come in and get a clean 20% gain, and if at all possible, no losses. So what I'm doing is I am looking at the S&P 500. The S&P 500, or Standards & Poor 500, is a snapshot of the top 500 wealthiest or richest companies in America, the top 500. And it is led by companies like Apple or Microsoft, Google, any company that's part of the Fortune 500, essentially the top 500 companies in America make up the S&P 500. And so because it is the most profitable companies in America, the most profitable 500 companies in America, this index tends to move upward over time. I've heard people say it like this: It's like playing with a yo-yo while you're walking upstairs. Short term, it's going to make up and down movements, but long term, that yo-yo is going to gradually move upward. Today is August 17th, 2020, and we hit a new record high for the S&P 500 today at $3,387 and some change, which is awesome. We're coming out of a pandemic and kind of a tough time with the economy, and we're shooting for higher highs. We're hitting higher highs, which is awesome to see. So what I'm doing is I'm looking at it logically like this. Over time, over the long period, we're seeing the S&P 500, the stock market in general, because we have a booming economy right now, we're seeing that trend upward over time. So what I'm looking at are inverse ETFs that mirror the S&P 500. So basically, S&P 500 moves. I follow SPXL, which follows the movement. It's an ETF that follows the movement of the S&P 500. So that's what I use on Robinhood to track the movement of the S&P 500. Then the two other ETFs on my watch list for this are inverse ETFs, meaning they will do the opposite of what the S&P 500 does. They are SPXS and SPXU. Whatever the S&P 500 does is also what SPXL does. They move upward together. And then the other two ETFs, SPXS and SPXU, are inverse ETFs. They're going to do the opposite of what the S&P 500 does or what the SPXL does. Hope that makes sense. So my thinking is, if the S&P 500 moves up, why don't I buy an inverse ETF? Inverse meaning it's doing the opposite. So that as the inverse ETF moves down, I buy put options. Put options are, you are basically betting that that stock or that ETF is going to go down. Over the long-term period, it's showing a downward trend. So as long as I buy put options, which means I'm betting that it's going to go down, it's already going down. Over all of the charts, it shows it going down. I will make money over that. This has been, in my opinion, probably the lowest risk and lowest overhead cost to buying options when it comes to trading on the stock market. Now, I've had a few people ask me why I don't trade SPY options, and I think there is more money to be made on SPY options. SPY or SPY follows the movement of the S&P 500, and that's great, like if you can get into that. But SPY has really expensive options. So here on Robinhood, if we actually go to SPY and we open up the SPY, which is the S&P 500 ETF, and we go to trade, we'll look at trade options, and we're going to say we think this is going to go up because the S&P 500 goes up over long term. And I try to buy them at least 2 weeks out. They're going to be more expensive this way, but there's some room for things to move. There's some room for the stocks to go up and down and prices to adjust. And that's just what makes me safe as a brand new beginner options trader. So today is August 17th. We're going to look at something like September 8th. And we're saying that we think that it's going to go up. We want to buy options that are in the money, that are going up with the S&P 500. Now, our share price is $337 for SPY. And to be in the money, we need to buy below that price. So we're down here, let's see, to break even percentage, 1.5%. You can see right here underneath, you have your strike price, $334 call. You've got $332 call. It only needs 1.07% to break even. So I open this up and it says that it's $9.42 limit price. And normally, like you would think that would be great, like $9, cool. But there's 100 shares in each contract. So multiply that 944 by 100. So if you want one contract, you're gonna pay $944. This right here is why I don't trade off of SPY. This is why I go with other ETFs that are a lower strike price. Now you could go up here where they're cheaper. Let's scroll all the way up. And you see that, let's see, here's one for 70 cents. That's super cheap. It's $351.70. So we'll click on that and we see 70 cents per contract times 100. Man, it's $70. You could buy it if you had $70. But here's the deal. What do we really think is going to happen here? We are way out of the money on this. out of the money, meaning there's basically no cushion for failure or if we screw up here. SPY is at 337 right now, and we're betting that it'll go to 351 by September 8th. I will tell you this, highly unlikely. If it did, you would make so much money, but highly unlikely. And also you can see here, when you open up the stats, there is zero volume, which means nobody has bought this. And there's the open interest is only 40, which means there's very low interest in this because it's just not a good move. So what I'm doing is I'm going to this inverse ETF right here, SPXS. This is the S&P 500 bear triple leveraged ETF. So basically, like I said, whatever the S&P 500 does, this does the exact opposite. The charts look opposite. So all I have to do here is go in, trade options, select my date. So in this case, the nearest date that is at least 2 weeks out is September 18th, so a solid month. Buy put options, because this chart is already going down. This graph is already going down. It's trending downward. So I'm just going to buy puts that it's going to continue to go down. That's it. And then you can see the plus 41 right there on the $6 put. That's where I have my 41 contracts currently. It needs to go down 6% in order to break even, and I've got some time. If you look above that, you see that the $7 put needs to go even fewer percentage points in order to break even, and the higher you go, which is called in the money, the higher you go, the less it needs to move. However, the more expensive per contract that it is. And finally, one last little bit to give you before I close this video out. One of the things that I noticed with the S&P 500 is that on most Mondays through Wednesdays, sometimes it's Monday through Tuesday, sometimes it's Monday through Wednesday, but there tends to be sort of a stair-step climb up. And I even noticed that on Fridays, right before the market closes, at times, occasionally, you'll see the S&P 500 drop. So what I'm seeing is kind of this stair-step pattern over time. So it might hold through the week, and then Monday, it kind of climbs up through Wednesday, and then from Wednesday till Friday, it just generally kind of holds the same flat pattern. And so what I've been doing for the past few weeks is on Friday evening, right before the market closes, I buy my put options for the inverse ETF, which is SPXS. And I buy those put options speculating that if the S&P 500 does stair step upward from Monday to Wednesday of that following week, then my ETF put options should stair step down. Put options are when you are betting the market is going down. Call options are when you are betting the market is going up. Currently, I'm only buying in the money options when I do buy options. I'm only trying to collect a 10 to 20%, 20% ideally, but I would take 10% happily for the week, every week if possible. I've had 4 straight consecutive weeks at 20%, and I'm extremely grateful. I'm not getting super greedy. I'm not dumping my money into really risky plays. I'm trying to play this safe so that I can hedge my risks and manage those risks so that in the long term, I can turn out green at the end of it all. And guys, so that is what I have for you today. I know this video may be a little bit confusing. I don't know 100% about trading stock options. I'm just kind of figuring this out as I go, learning, putting in the time. Anywhere from 30 minutes to an hour a day, I watch videos and I study and I look at different patterns, and I'm just trying to figure all of this out as I move along carefully, strategically, not just throwing my money into any old thing. So if you're an experienced options trader, please feel free to drop a comment below. Please no spamming comments. I'm not interested in following your friend who makes great calls and you pay him for him to tell you what to do. I'm not interested in that. So those comments will be deleted and blocked if you do comment those spammy comments. Once again, this video is just my opinions and sort of what I'm doing. None of this is financial advice. And honestly, you shouldn't follow what I'm doing. You should figure out your own strategy, your own method, your own path, because none of this is any type of any trading or financial advice whatsoever. Figure out your own path. If it looks similar to mine at the end of the day, that's on you. But hey guys, I hope you enjoyed. If you got some value out of this, or if I got anything right, be sure to leave a like for the YouTube algorithm. If you didn't like this video, be sure to give it actually 2 thumbs down. Double click that thumbs down button. And then if you're not already subscribed, consider subscribing for more videos about how to make money online. We may or may not do more of these videos in the future, just depending on how this one goes. And as always, guys, keep selling, get the bag, and I'll see you on the next video.